Hi, and welcome to the Intentional Wealth Update from Morton Brown Family Wealth. I'm Dennis Morton here with Katie Brown. How are you doing, Katie?
Hi, Dennis. I'm great. How are you?
Great. We're going to jump right in today with a hypothetical. Katie, I want you to imagine this. If I told you that in 2018, over the next 5 years, the S&P 500 would have 3 bear markets, there would be a global pandemic and nearly a 40% decline in equities in a month. The global economy would shut down. The pandemic would last for almost 2 years. We'd have the highest inflation in 40 years. Interest rates would rise fast. We'd have presidents from both parties in office. The first land war in Europe since World War II. And the S&P 500 would return 72% total return and over 11% annualized. What would you do?
I would say, is this a pick two? Like, there are so many things on that list there, and one of them doesn't go with the rest, right?
But that's been our lived experience, right?
Yes.
So this is actually the first of 2 special episodes of our Intentional Wealth Updates, because Morton Brown Family Wealth is turning 5 this month. It's our 5th anniversary. We launched and came live into your world back in April of 2018, not knowing that was going to be the experience. It's crazy to think about, isn't it, Katie?
It's extraordinary to think about. I mean, up until that point, you and I, we both had, 10, 15 years in the industry, and really the great financial crisis, that was definitely a challenging time. I came in kind of coming right off of 9/11, and that was a challenging time, but that was over a much longer span of time, a lot more years kind of packed into there with some sort of smooth sailing in between.
Right.
Not as much the last 5 years.
No. And I think when I first ran that set of statistics by you, I asked, what would you do? And you said, I wouldn't found a wealth management firm, that's for sure. So
Happy I did.
Yeah, absolutely. But truthfully, it is crazy to think that, for the first 10 years that we knew each other, we met back in 2008, I think, when we started working together. That first 10 years was really defined by some, pretty static things. It was a bull market that lasted for a really long time, very low interest rates, very low inflation, and just everything has kind of spun on its head, which has created some challenges, but also opportunities. I think the craziest part is, through all of it, the market's done what the market does. There's a lot of silver linings, so to speak. So I want to share a chart just kind of to give you an idea of what the last couple of years looks like. This is a chart of the S&P 500 going back 5 years in percent change. You can see there it is up 54%, a little bit different from the number we shared earlier because that was a few weeks ago. More telling here is look at the percent off of the high. This is the amount of time that the S&P 500 has spent off of its all-time highs. These are long periods of time. This was the end of 2018, and it didn't recover until May of the next year. This was the pandemic crisis. And then you can see since the beginning of last year, the market has yet to regain its all-time highs. Katie, that's a large chunk of time in the last 5 years where the market wasn't at its all-time highs, and yet it's tremendously positive through the last 5 years.
Absolutely. Something that we've talked to clients about, and maybe many people that are listening to this right now, is volatility is not just to the downside. And there's danger in anchoring at the bottom and assuming it's going to continue that way. There's also just as much danger in anchoring at the top and assuming that it's going to continue that way. Volatility really happens on both ends. But we know that the long-term trend is somewhere there in the middle with an upward trend, as we've seen in the S&P 500 over the last very challenging 5 years.
Right. What's been the most difficult part of the investing environment for you since we founded the firm?
That's a great question. I think managing expectations and continually planning through it has been both rewarding and challenging at times, because once again, we can't anchor in any particular area, and we have to, if we've learned anything over the last 5 years, it's humility. And we have to accept that we don't know what's going to happen, but that we need to be flexible and fluid throughout the process and present, be as productive as possible. But I think continually checking in and helping to set those expectations has been at times challenging. How about for you?
I agree. There were very few things written on the calendar in 2018. So, if we look out and say, what are the things that are going to happen over the next 5 years? We hear clients, for example, talk a lot about what's the impact going to be of this election cycle. And we know that the first Tuesday in November, every so many years, there's going to be an election taking place. And we've been through a few of them in the last few years. But rarely were those the events that took place. It was something happening, on a Tuesday in March when the pandemic took over, or when interest rates rose, or it's not, things aren't on the calendar and you can't predict them. So you need to plan for that uncertainty. I'm really grateful for the planning process that we went through in founding the business, because we've had to plan for that uncertainty too. We couldn't, expect everything was going to be perfect, or that we knew exactly when the bad things were going to come along.
Right. Right. I love, Dennis, you wrote a piece a couple of years ago, and it was the good old days. And it just talked about, and it was at a time when we were at market highs. There were a lot of positive things happening in the world around us. It was a very positive economy for a period of time there. And actually, there's still a lot of positive things happening in the economy around us. But I remember specifically at that time, we had a lot of conversations around, we don't know if we're at the top, but things are really good. So how do we move from this position of strength for when things are more challenging? And I think we have to constantly keep that in mind. What can we do in both good times and bad times to prepare for whatever that next cycle is going to be?
And that, for me personally, that's my favorite thing that I've written in 5 years, because frankly, it's a life philosophy too. We say that about raising kids. We have 4 kids under the age of 17. At some point, 20 years from now, we're going to look back and say, all those crazy days, those were the good old days. And they don't feel like it right now. Just coming off of a long spring break weekend, sometimes it doesn't feel that way. Same thing in the markets. Like, there's always something that's going a little sideways. But if we stopped and said, all right, we're grateful for what we have. What can we do moving from a position of strength, and to be prepared? It's why you're never fully exposed one way or the other. And you never get things exactly right. But I think I wrote that in the fall of 2019. So that was pretty good timing. And I bring that up. I still pull that up from time to time and share that out, just a piece of perspective. So what's different about today than 5 years ago for investors?
Well, there are a lot of things that are different about today, especially coming off of last year. For a really long time, we said it is very difficult to be a conservative investor. It's very difficult to pick up some yield and to have some safer assets actually working for you rather than just keeping your money whole. So I think that's one of the positive externalities, is that there are places where we can gather yield and start to accumulate some safer income. I think that's definitely a difference in the investing market. And also, even on the equity side, we're getting back to a normalization of valuations, and things are becoming more reasonably priced. It's a different investing environment for sure.
Yeah. I think it's also, it continues to be just a rapidly democratized environment. Costs continue to compress lower. We talk about trading costs have vanished in the last 5 years. You just completely, more and more of that friction that used to exist is just falling by the wayside. I think that momentum is really very helpful for investors.
That has been a wonderful change for investors.
Oh, yeah.
Our environment has changed significantly. It used to be that you bought and sold stocks for a commission, and then we went to these packaged mutual funds, and you had a manager that was running those funds. But then there's always that internal fee that you may or may not have seen, and there could have been a commission on top of it too. We are in the process of simplifying, but we've really seen those management fees come down significantly. Those internal expense ratios that, once again, you don't see. I think in general, a lot more transparency in our industry. We still have a ways to go.
Right.
But that has been a very positive over the past 5-10 years.
Yeah, absolutely. So one last question for you. What have you learned in the last 5 years about investing that you didn't know before? We're both getting long in the tooth in this industry. We've been around a little while. So this is, we were pretty sure we knew everything in 2018. Turns out that was not the case.
I don't know if it's a learned new or just continued to be sort of hammered into us that we can't control it. I think going back to being a conservative investor last year was just a shock to the investing world, to have fixed income bonds, the safer assets drop as much as they did. I think for a really long time throughout most of my career, and really going back to the history of the US aggregate bond index, you very rarely had a negative year, let alone a negative year that was lower than 2% negative.
Yeah,
It just
yeah,
didn't happen, didn't exist. And so living through that and recognizing you can only move in one direction for so long when it comes to rates. And when it's time to change the ship, there are going to be some ramifications.
yeah,
That was a shocker, I think, just how quickly that happened last year.
yeah, yeah, absolutely. I think for me, the last 5 years have, maybe it's not taught me, but have validated the idea of being patient. Sometimes it happens in our industry. Sometimes advisors justify their presence by the activity that happens, whether it's active management in a mutual fund that you pay high cost for, or whether it's a lot of trading in a portfolio or stock picking or whatever it might be. And we really pushed back against that at our founding, and this notion that we can have an investment philosophy that's informed by some core principles and then coach clients through that process. And the adoption within our client base has been incredible. Being able to say, you know what, we don't need to be fast movers, especially when everything's moving so fast anyway. You can sit back, be patient, and move from a position of strength, as we talked about, or take advantage of opportunities when the markets are down, which we did a lot of last year. So I think that patience idea and being able to implement it, it's created a very calm environment for our clients. And hopefully that comes through. It's one of the reasons why we do these communications. We make sure that people know how we think about things so you can be more calm and patient as an investor, which in the long run is really going to serve you well.
Yeah. And we've talked about it a lot too, even just the focus on the financial planning and having active financial plans for our clients so that we can zoom out, we can take a look at the bigger picture, we can put things in perspective. That has been just very instrumental in a lot of conversations and building that confidence that this happens, but we're going to be okay with the patience and with the plan.
Right, right. All right, Katie, the parting words. What's your favorite investing theme or story from the last 5 years? What just kind of makes you shake your head, chuckle? What jumps out at you? There's been a lot of crazy stuff.
I don't know if it's favorite, but it was just shocking. I mean, and we'll talk about this for generations, but the pandemic and the immediate drop in March of 2020, to witness the economy shutting down around us, to be sitting at home witnessing it was just bizarre.
Yeah, we talked about just kind of that pendulum swing, like nothing was stopping in the middle. It was all moving so fast. Kind of along those same lines, negative oil prices, things like that. Like when oil hit $100 last year and people were saying oil's at $100, $127 off of its low. That was just a crazy thing that happened. And to live through that and kind of help people, make sense of it to the extent you can. First of all, it's been a pleasure to be able to do it, but it's also helped us to become better investors, hopefully better advisors in the process. Next time we get together in a couple of weeks, it'll be the 5-year anniversary at the end of April for Morton Brown Family Wealth. And we're going to do an Ask Me Anything episode. Our team's always asking questions about the origin story and what it's been like running an advisory firm. If you have questions for us, want to know some behind the scenes information from Morton Brown Family Wealth, shoot us an email. Maybe we'll talk about it and share some stories from the first 5 years. So that'll be fun, right?
Yeah.
All right, good. You bring your questions too.
Okay.
I've got a lot of them for Katie. Until next time, hope everyone has a great week and we'll catch up with you soon.
Thank you.